Tech stocks got hammered again last week after the closely watched consumer price index soared 8.3% in April, which was more than the 8.1% estimate and close to the highest level in the last 40 years. Welcome to another edition of Money Monday, my weekly podcast where I share a few words of financial wisdom to help put you back in the driver's seat of your financial future. Today, we got to talk about the inflation nation. Tech stocks got hammered again last week after the closely watched consumer price index soared 8.3% in April, which was more than the 8.1% estimate and close to the highest level in the last 40 years. Furthermore, core CPI, which excludes food and energy, because why would we measure those kind of things? Food and energy, those things are not important. But the core CPI was higher than expected, rising 6.2%, while shelter costs, which account for 1/3 of the CPI, shelter costs advanced at their fastest pace since 1991. There was also a big jump in the underlying services inflation, which has been climbing in recent months, suggesting that price pressures are becoming more entrenched in the economy. So we're starting to see energy pull back a little bit, but it's not enough. The markets were hoping for a better number, and it's not good enough to rule out further Fed tightening. Some even think that the deep-rooted inflation could prompt a 75 basis point move from the central bank, though Fed Chair Jerome Powell has set the bar quite high for such an increase. Now, the likelihood is for a series of 50 bip boosts at the coming meetings until these price pressures, until they display a real peak and make their way out of the economy. Meanwhile, the 10-year Treasury yield climbed back above 3% following the release of the CPI report, but then eased back below the threshold. Now, look, with the annual rate ticking down from 8.5 to 8.3%, it could be tempting to say that we've seen the peak. But look, we've been head faked before, as was the case last August. So if you're really worried about this inflation, and if you're really worried about whether these rising interest rates are going to mean a recession or not, here's a couple of recommendations. So first of all, you've got to get out of bad consumer debt. If you really think that a recession is coming, you can't keep blowing money on things that you don't need and going into debt in order to get those things. And depending on your situation, maybe you have to do some belt tightening right now. Maybe you got to cut back on some things that are luxury and not necessities. You know, Americans, we live in the greatest country in the world. I mean, people who live here in America, even if they're on welfare, they have a better standard of living than 90%, 99% of people who have lived anywhere in the world at any point in time in the world's history. So we get addicted to things that really are luxuries, but we kind of trick ourselves into thinking that they're necessities. So maybe you got to do some things, and I hate saying stuff like that, but maybe you got to cut out the Starbucks. Maybe you got to cut back on your subscription services to Netflix and Amazon and Disney Plus and those kind of things, right? Again, I'm starting to sound like Dave Ramsey here, and I really hate that. And you're adults. I'm not trying to tell you what to do, but I'm just trying to give you food for thought, right? You know, as a financial consultant, I speak with people all day long about their financial situation. And it's interesting that people who come to me wanting to make a positive move in their financial lives, but when push comes to shove, when it's time to part ways with their money, as in give it to me in order to save and invest, instead of spending it on things for recreation or for enjoyment, when push comes to shove, a lot of times they just can't do it. And those are the people who are going to be absolutely wiped out when this recession sets in, you know, whether it ends up being this year or whether it ends up being in 2023, like a lot of the banks think it'll be. But I'm seeing a lot right now. I'm seeing a lot of these recessionary indicators. In fact, it was very unexpected, but in the first quarter, GDP contracted by 1.4%. And what is the definition of recession? The definition of a recession is 2 consecutive quarters with the GDP shrinking. So we just saw that quarter one of 2022, January through March. So in this quarter right now, which we're about halfway through, this quarter, we're halfway through. If that happens again, that means that we're officially in a recession. So you guys just take care of yourself. You got to get your financial house in order. You got to make sure that you're not spending, or I guess wasting money like on excessive expenses if you don't have that money. And if you do, maybe this is a time to cut back and make sure that you're saving more. I mean, everybody's 401ks are taking a hit. The stock market is down. People are losing 20, 30% right now. I've talked with multiple clients who like they're doing like IUL business with me because they've got their investments in their 401k with their workplace employer. And they're diversifying with me, but they're telling me, hey, my 401k is down by more than $100,000 just in the last few months. And this is scary stuff, you guys. And I got to tell you, over the next few months, if this continues, it's going to separate the winners from the losers, right? If we do have a recession, if this market continues to go down and it stays down for any length of time, that is when people make mistakes. And that's when they end up losing bigly, if I can steal a phrase from our former president. But that's where mistakes are going to get made. And the people who have built their financial plan on a solid foundation, where they have weapons in their arsenal that are safe, they're protected, they're liquid and accessible. People like me, quite frankly, this is where I end up making a killing. Why? Because I have safe money. I have access to that cash. As things come down, I'm able to step in and buy stocks, real estate, and crypto for cheap when it's on sale, when it's at a 30 or 40% discount. And it's the people that haven't planned well in their financial lives that have to sell those assets in a fire sale because they need cash. Those are the people who are going to lose. So you guys, I'm bringing that out to you because I hope that doesn't happen to you. If you're not sure how to plan your life like this, please get a hold of me. All you have to do is message me on social media, email me at ronald.sneller@snellerfinancial.com. I'm happy to have a conversation. I'm happy to answer questions. I'm happy to schedule a complimentary consultation with you to learn about your financial situation, to learn about your goals, and to help you formulate a strategy combining all these different, banking and insurance and investments and retirement, combining all those different strategies with tools and vehicles and weapons in your arsenal that will help you proceed with confidence so you can sleep well at night, so you can have peace of mind. And yes, maybe depending on the situation where you feel like not only will you not be hurt by the coming downturn, but where you're actually able to take advantage of it and to profit off it. So if any of that sounds interesting, again, just drop me a line. I'm happy to talk with you. But that's going to wrap it up for today. So that's going to be today's rant for Money Mondays. And as always, thanks for listening.